video. Today we're going to look at PLNT Fitness. So this is a case study. This is not an investment opportunity. This has already happened. This is just me showing you how you can get your edge with time using Notify Me Edgar. So let's head over to the SEC filings of PLNT Fitness. As you can see, on the 2nd of July, there was 5 insider trading reports filed. There you go, 200 securities acquired. That is a grant of the issuer's common stock, vests on the grant date. That is our keyword. It says at a price of 0 because it's a grant of common stock, but at market price, that is at the time around 20,000, because PLNT Fitness trades at 100 a share. So there you go, you have 20,000 there. Go over to the next one, another 22,000 there, also vest on the grant date. Third one, that is another 23,000, and fourth one is a 50,000. So there's around 50, 20, 20, 20, so that's around 120,000, $150,000 dollars worth of shares, right? Let's go to the market. That happened on the 2nd of July, which was around here, and they become immediately exercisable. It was trading at around 105, right? If you look at the price action, there's a 10% gain over the next month up until July. Right, and as you can see on the 6th of August, which is when the stock already fell a little, there was a big fall, but yeah, stock price went up. Interesting how it fell that much, because it really had a good report, if I believe, from what I've read. But what matters is we need to look at this part, this growth. Investors got granted shares on the 2nd of July, and they became immediately exercisable. You can look at the 8K and the 10Q report. There you go. Revenue increased 13% in 1 year period. Sales increased. Net income was 58 million compared to 46 million before. Yeah, net income increased. Adjusted net income increased. Adjusted earnings before interest, tax, discount also increased. 20 million, 23 new PLNT Fitness clubs were opened. They have marketable securities of 582 million, and second quarter ending June 30th. There was growth from the second quarter as well, and year-to-year basis, PLNT Fitness is doing really well. Let's go down to the most important thing, which is management discussion of financial results. So let's see, 20 million members, 2.5 thousand are franchise, so it's mostly franchise based. For as of June 25, they have contractual commitments to open 850. I'm assuming franchise. That's around 30% of what they already have in the future. So they're gonna increase their franchise by a lot, meaning they're also gonna increase their earnings. Why do I say this? Because of the where is it? Revenue, there you go, franchise segment. As you can see, over the years, franchise both actually increased, but right now, where is it? Franchise owned clubs. There you go. This is what I wanted to look at. They earn most of their money from, at this point it's still corporate, but franchises have, they take a lot of per. Oh, okay, never mind, I was looking at the wrong table because 24 is after 25. There you go, this is what I wanted to show you. Franchise and corporate owned clubs, revenue has increased drastically if you compare the 2024 to 2025 stats. It's, yeah, I think this is in millions if I'm not mistaken. So that's a large number. That's a large increase for franchises. Their, of course, their total expenses also increased, which is normal, but that is not important. Cost of revenue, segment adjusted earning before interest, and the rest. Yeah, as you can see, income has also been increased, so did the total revenue. Assets. This is what I wanted to look at. There you go. Franchise owned clubs, new clubs opened, clubs debranded, sold, closed, clubs operated at the end. Clubs are, yeah, clubs are being increased. 100 clubs increased in a year, with a forward-looking statement of 850 contracts already open. And they operate 100 more clubs by the end, and most of them are franchised. Yes, most of them are franchised, and that's exactly where I wanted to come to, because they had said that they had said that they're contracted to open up 850 more franchise clubs, which should drastically increase their earnings and their revenue, and expenses should pretty much stay flat, as it's a franchise and it works differently than opening up a club yourself. But yeah, I wanted to kind of touch upon the earnings and the quarterly reports, and how kind of these insider trading reports came right before these, and it's kind of sounds premeditated. In this case, it could be all legal, but it's the timing of the reports which are usually made before these kind of big announcements and positive feedback. So yeah, you could have capitalized on around 9%. This is not such a strong case of illegal insider trading. It's just purely timing by firms, which are used to, rake in the profits. But yeah, that's it for this video. It's a pretty simple one, pretty simple analysis, and I'm looking for other things that I can show you. But these trades come once in a while. It's hard to find them. But yeah, that's it for today.